All right. Well, second edition.
Collector's edition.
Collector's edition. Yeah. It's the retail season, right? It's the season of all retail right now, right?
Yeah.
And it 'tis the season. So, well, after our last episode, it's such a resounding endorsement for Chipotle. They now sponsor the podcast.
Just kidding.
We're just kidding. But we're working towards that free bowl.
Yeah.
So,
One free bowl each.
Rob Dog's back.
Yeah.
Glad to be here.
We got Bob back.
Bob decided to come back.
So, well, let's run through the first thing. The biggest news I think that's gonna affect everything right now, and is gonna be the Fed.
Absolutely.
We got what 50? We get 50 bips.
25.
25.
Yeah.
100 since
100
September.
cents.
Yeah. So 50 in September.
But rates aren't really coming down.
Not coming down enough.
Before you dive into that, I guess we have 2 more apparently labeled for next year.
But they thought it was gonna be 4.
Yeah.
Now they're saying it's 2.
Inflation's a little tough.
Market got hammered yesterday.
Yeah.
It was down big. It's back up. And I haven't looked at it recently, but it was back up today. But yeah, I got hammered yesterday.
And we're recording. This is 12/19, so 12/18 it got smoked.
Yeah.
Mm-hmm.
So
right. But yeah, the big changes. I guess when you look at what's going on in the market and with what the Fed's doing, and kind of like what Will said, only suggesting maybe there's only 2 rate reductions next year, which people didn't love hearing. But I think the big thing for us and what we do on the capital markets side is we're really focused, obviously, on that. And the momentum's going in the right direction, but we're watching that 10-year really close. And the 10-year, if you go look at it, we kind of charted everything like what's that look like over the year. And we just looked at kind of we charted the high, the low, and kind of looked at the median for each month. January, it was like just over 4. It was 406 for the median. And then it kind of, ticked up in February to 426. And then it started dropping. It jumped back up in April to 4.6. And then from there, it started dropping again. Got all the way down to 363 in September, right around the first rate reduction, that 50 basis points we were talking about. Mm-hmm. From there, it's gone the wrong direction for what we do. And the capital market side, anybody that's getting debt, a lot of that's all based off the 10-year. And right now, today, this morning, it was in 4.5 range. So it's just tough. I think that, for us, we want to see that back in the mid 3s, where if you start looking at debt, most of the mortgage guys we talk to, it's like you can, it depends on the spreads that the banks are out there with, but a good average is 200 basis points over the 10-year. So at 6.5, based on where the 10-year is, it's tough to make these deals work. With where cap rates are trying to hold. So,
let's say in the small, let's call it sub $5 million acquisitions. Are you seeing those buyers use debt right now, or are those really like all cash 1031 guys right now?
Primarily all cash 1031 guys, but on some of these bigger ones, especially after you get, let's just say, 4 million and above, there's still bigger exchange buyers, but you continue to elevate that. We'll get into that a little bit later with some of these bigger price point deals that we've been doing that are 10 million plus.
Yeah.
There's just fewer of those buyers in the market. Yeah. And if you go look at, multifamily and some of these other asset classes, a lot of that will really drive the market with single tenant, triple net assets like we're primarily selling.
Yeah.
And so when the debt's this high, it's hard to make those multifamily deals, pencil and make sense.
Yeah.
With that lack of velocity and transaction volume, then there's fewer exchange buyers in the market. And so that's what we're seeing. We've seen a little push at the end of the year here, which is all, I think, positive, but we really need that 10-year to come down so you can use debt on these bigger transactions and there'll be bigger exchange buyers in the market. But
let me ask you and get your opinion on this. It seems like there's a little sentiment that with Trump being reelected, it's a good chance we're getting bonus depreciation back.
Yeah.
If rates continue to stay where they're at, but we get bonus depreciation back, do you we have it, but it's what, we're at 60% right now.
Yeah. It's supposed to go to 40 next year and
cutting down to 40 and tearing down. If it goes back to 100, do you think that will spur activity?
Absolutely.
Okay.
Absolutely. We're doing a number of transactions right now in the C-store space, a lot of 7-Elevens, and there's exchange buyers that are chasing those because of the credit, investment grade credit, and they like it from an exchange standpoint. But there's a large number of bonus depreciation buyers in the market right now. There's one large one that completed a huge transaction. He's buying over $100 million in 7-Eleven assets primarily that we're transacting with. And there's others that are smaller, 10 million or, 5 million or whatever it may be. And those guys are still showing up. Even today, we were on a call this morning with a buyer that's trying to transact. We're December 19th. I think we've got 12 days left in the year. If you really boil it down to business days, it's more like 7.
Yeah.
And you've got holidays. And so
7 with everybody working at 50%.
That's right. So with everybody you need to close that, people are disappearing. And so we're on a call this morning, not even under contract. We're trying to, these guys are trying to convince our seller, transact with us. We'll do everything we need to do, all the heavy lifting. We've got the relationships to get this done. We're all cash. And they want to close it this year for bonus depreciation. So those guys always show up at the end of the year. We closed one last year. Literally, I think it went under contract the 29th or 30th and closed on the 31st. So
what?
It's
one location?
One location. Yeah.
Okay. I can see that.
Yeah.
If you're pretty sure there's no environment.
Not the big buyer. The big buyers, he's done it more the right way and done it over a couple
we
of
did
years.
it last year.
It's possible.
It is possible.
It's more possible in this space too because the developer's already gone through so much due diligence on their end. I mean, it's really just, you probably had a title commitment issued within the last 18 months already on this thing. Most likely nothing's changed.
Yeah.
I'm just thinking about what we do on a day-to-day basis. Like,
remember, triple net leases is where everybody has their shit together.
Yeah. Yeah. Well, that's why we do it. We
convert people to triple net.
Yeah. It's just like, we find stuff, every deal, something hairy comes up. It's just, it's everything. I mean, what would you like to ask that comes out that's hairy? It's all just
now. But in all fairness, too, we have a Murphy's deal closing. There was a total curveball that just got thrown at it. This week, but it's all getting rectified. But it's pushing it back.
But in terms of like who that buyer is for that asset, all that BS has been cleared out.
Yes,
it's all done.
Yeah.
Like, here's your present. It's coming direct from Amazon. Open the bag. It's there.
Yeah.
You don't have to worry about all the A to Y. You're just at Z.
So it's pretty attainable.
Yeah.
I mean, if you can get people to work.
Yeah. That's right.
Yeah.
That's a big hurdle.
That's a huge thing.
Are the attorneys, are they ready to go? Because they're going to be working a bunch around the clock. Title company.
Yeah.
This particular asset's under construction. So it's got a whole nother kind of list of hurdles to get through.
Yeah.
They got to get lender releases and it's complicated.
Oh yeah.
But,
If it's still mid construction, there's some nuance there that's not as easy. So
go forward.
Yeah.
To your point, though, if we really believe the bonus will get extended, it's just a matter of, do they get that done early in the year and they try to make it retroactive to this year?
Yeah.
Nobody's buying based on that. Or does it happen later next year? But there's buyers that if it was 100% right now would definitely be transacting that are not transacting.
Yeah.
So it will definitely increase transaction volume if that happens.
Okay, so he gets in what? January 20th? Okay.
Or I don't know, when's the inauguration?
The first 2-3 weeks of I'm assuming it's all self-serving for him too, right? Like, let's not get past the fact he owns a shitload of real estate. If he was to check with it. Could he have 2025 be 100%? Or would that push forward to 26?
No, they could make 2024 100%.
Yeah.
Oh, wow.
Originally, this year.
So they can retroactively.
That's why we were late on our K1s this year.
I know that. I just didn't know how far back they can reach. Or is it just, hey, it starts today?
It depends on how they structure it. But like earlier this year, they had a bill in the House that passed that was pushing the bonus back to 100%. And they made it retroactive to last year. So it was early enough in the year before all the tax deadlines had hit, but it never got through the Senate. So it never got passed. And they tried to do it a couple more times. So some of it's timing on when they can get it through and do they make it retroactive or not. But I think
that'd be sick.
The thought is they probably do it at a point, hopefully next year, and we'll just have to see if it's retroactive or not.
Dude, get some more cheddar.
Yeah. It's a real thing.
It is super real.
So
yeah, so we're pushing. We're hoping for a big time. We do enough with those buyers where the exchange buyer forever. We'll do deals with funds and REITs and family offices, but the REITs and big funds are not the best buyers for us. I mean, they're great from the standpoint they'll close and they execute and they're great on all that stuff.
Yeah,
they're not the best buyer from a pricing standpoint. So we're representing sellers. They want to go maximize price.
Sure.
And so from that standpoint, probably 90+% of what we do is with private exchange buyers or high net worth individuals. Bonus depreciation buyers have really accelerated over the last, call it. The bonus depreciation got put in at the end of 2017, but probably starting in 2020, it really caught on and accelerated from there. And then now that it's tearing down, there's still good benefit from it. But I think if it gets pushed back to 100%, we'll see more buyers, come in.
Well, I think the good thing about bonus depreciation too is if you get to 100% and you look at it, people have told us, hey, why don't you do a 1031? And I'm like, man,
I know.
I don't like doing it, man. I feel like I'm going to miss something on the buy a little bit. We've done one.
Because of the timeline pressure and
timeline pressure. But if you have 100% bonus depreciation, pay the gain and just tell everybody to go buy into the next deal with you and bonus depreciate it. And it's about the same tax savings. So obviously you could 1031 or something and then bonus depreciate it, which would be great. But at the end of the day, it's still not a bad deal to just take the profit and then go bonus depreciate the next asset.
Yeah. I think the problem we see is just because the deal, we're just not looking at it through the lens that Bob's buyers are looking through it. I think a lot of times.
Yeah.
Because we're getting all like, oh man, we're trying to get to 8.5 yield on costs and we can't find that. And now we're on the shot clock time wise. And it makes it extremely challenging because, some quarters we'll have 5 deals in title and then some quarters we got nothing. But the volume of what we're seeing has not changed, but it's just, how it is.
Right.
So it makes it tough for us to.
I think the key is in y'all, like you're talking about, as long as you've got the volume there, the key is if you ever sell those assets, you bonus, you got to go trade them into something else.
Yeah.
Or you get, it doesn't make sense. You get hammered on the recapture. So,
well, let's roll into the tenants that we're going to be tracking.
Yeah, perfect.
So Bob's our analyst on that. So
I think what we're going to do or plan to do for right now is we'll track kind of we'll start with 4 kind of key tenants in this space. They all have a little bit different flavor. And then we'll just kind of update, once a month, and then we'll try to highlight one of them. Yeah. We've already started on that a little bit with 7-Eleven, but we'll try to highlight one of them. And then as we run through them, we'll continue to track them and we may highlight a new one. Maybe it's a new concept like Kava or somebody else that's growing or there's something exciting about. But for right now, we'll start with 7-Eleven and Chipotle, everybody's favorite.
Yes.
Starbucks and then Walgreens. And so I think what we'll do is just kind of touch on with 7-Eleven. If you look at all 7-Elevens, there's about 143 on the market currently.
Okay.
Kind of all shapes and sizes. One of the things that we try to track is more new construction, 12 plus years remaining. And so we filter that down to probably it's around 70 right now.
Okay.
And then if you look at just kind of trends, so right now, those that are on market, as far as from a price point standpoint, the high is a little over 12 million. The low is just under 2 million. And the median is about 7.6 million.
Okay.
And if you, as a trend line, if you look back at that, call it, I don't know, pre-COVID, as a reference point, that median would probably been around 4 million. And so you just kind of see the trajectory of cost of increase, land's gotten more expensive, labor's gotten more expensive. So, that's something we'll try to touch on from.
Are any of those the ones that they slated for shutting down? Or is there some in that?
There's some in that.
It's
like
probably the
that's
$2 million one.
That's in the bigger number though, the 143.
Okay,
so
yeah.
And they've closed a few. If you really look at it as overall, it's I think 3% or less of their portfolio. So
Okay.
It's kind of a
100% of your portfolio if you own that thing.
That's right. That's right.
That sucks.
Well, they're paying rent.
Are they?
They are paying rent. Yeah.
Oh,
So-
is it dark? It's dark.
Just dark. Yeah.
Okay. How many of those are ground leases versus just
Very
Very few?
Very
Okay.
few.
So
There's
7 of them's
handful.
typically a full.
for the most part,
thing.
those are your land and building.
Yeah.
But,
Yeah.
but there's some ground
Improvements.
leases sprinkled in. Most of these tenants that I think we're talking about are trying to avoid ground leases. Just
gotcha.
they're trying to save their capital.
Yep.
I guess just to continue on with them from a cap rate perspective, if you go look at that number of everything, the high cap rate was 6.25. That's maybe one of those that, is some of the ones that they did close that still have term on them. I see them from 6 to 6.25 just on the remaining term and everything. The median right now is just over 5.15 in that range. And the low is like 4.25. That's a California site. Again, there could be some ground leases in there.
Real quick, a California site. I mean, you got to pay 13% state income tax on that money. Like,
It gets what?
how does it still always just get such a premium?
I'll tell you, the premium has shrunk. Used to, we would see minimum 50 basis points, maybe more like 100 basis points. If you're looking at, call it California property, the same tenant, whoever it was, everything's kind of the same.
Yeah.
California versus Texas. I would tell you that premium has shrunk. There's still a premium.
Yeah.
There's still a lot of West Coast buyers that want to own in and around where they live. There's a lot of buyers like that. And so I don't think that's changed, but we're also talking to a lot of West Coast buyers that they want to get out of those markets. And that's why they, sell an aggressive cap rate out there, and they want to move those funds into Texas or another market that they like. And so we're seeing more and more of that. And I think because of that premium has shrunk over the years. I guess on I guess we started talking about cap rate. So the high or the low was 4.25. If you look at, I don't know if we want to get into NOIs and rents, but just quickly on 7-Eleven, the high was 678,000, which is a big number. Median was 390,000, and the low was like 108,000. So that's a range that we're going to kind of track going forward.
We did a lot of due diligence on 7-Eleven. We can't probably get into too much details. Jeremy and I, we tracked down funding a portfolio of build-to-suits for them, and with one of our developers. And the data that you're sharing right now is like kind of reconfirming some of the decisions we made and some of our due diligence. So
we got to a point they're like, well, let us know what you want to do. And I just wrote them back and I said, I think you want to buy at this. I think It's totally stupid. They wanted to buy like in the 7s.
Yeah.
They're going to buy like 10 of them. But I was like,
we were trying to bringing outside capital, structure our forward sale. And a lot of the rents were on the higher side.
Yeah.
So, and that's kind of ultimately for us, it's just, we kind of look at like, what's your yield on cost, return on cost that you're developing to? What are these things trading at? And then basis in the rents, and the rents that we were looking at, kind of different firm at that time, but they just said it's kind of correlated a lot. And so,
I mean, what'd you say the median cap rate was on 7-Eleven?
The median was 515.
Yeah, 515.
Exactly. We were like, over 100 basis points off of like way,
it's almost 200.
This is what's listed on market. So I would tell you that's,
what we'll trade at maybe.
I think if you look at Texas and Florida, which are probably the preferred markets just because of business trends and population trends and all the positives that's going on here and there, those are probably the best. And those are going to be right around 5.25 range.
Yeah.
And then you get less desirable markets, things that are kind of outside the norm, 10 plus million, you got to be in a great market to still get that.
Yeah.
So those are the ones that start pushing up where those cap rates go up, and you gotta be careful, and you gotta be a little more cautious how you underwrite.
Independently affirming all of our
assumptions.
Yeah. Happy. We did not set this all up, people. Yeah.
So I'll tell you, we've transacted on multiple that are north of 10 million, and they've traded well. So it just kind of, again, goes back to market. Like, is it 5.25-ish range because they're in a good market like Texas, or is it in the Midwest and it's trading, mid 5 or 5.65, something at a higher range? But market definitely has an impact.
How many days do we know how many days on market those things are?
I mean, they're all over the map.
Yeah.
I don't have it here handy, but I would just tell you that it's interesting. There's deals that have been on the market for 6+ months. People are really trying to hold out, and a lot of sellers, they know what's going on. We're talking to them all the time. They know big push at the end of the year, but it's like, guys, if we don't transact with the guys that are active right now at the end of the year, those guys, the bonus guys, the one thing I would say about them, they disappear until almost the end of the year.
Yeah.
And I pushed a number of them. I'm like, hey, you need to transact over the summer when there's less pressure. Think you could get a better deal. The more competition, the better the price goes up. So the challenge is those guys are very reactive, and maybe that's just the nature of it. They got to kind of get with their tax attorney or CPA and say, what's my exposure? What am I going to owe? So they know really how big a transaction do they need? How much bonus do they need to offset that gain? And that doesn't happen usually till late in the year. And so that's why it typically happens like that. But a lot of these have been on the market and then they've started to move. It'll be interesting to see, what happens next year. And if the bonus gets extended, it'll ramp things up.
Yep.
All right. So Chipotle, real quick. We'll try to
title
get through these really quick. But on the Chipotle side, there's about 63 on market. And if you kind of, that's some shorter term stuff too. Could be some multi-tenant deals in there. Actually, I think that was all single tenant. And then if we kind of look at 12 plus years remaining, that drops it down to like 47. The only reason we kind of look at that is a lot of their deals are 15-year.
Yeah.
There's some older ones that are 20-year. And so really what we're doing is like, hey, which ones are more kind of ideal and what are those ranges? And so on the Chipotle side, the high was 5.2 million. Again, this is on market. The median was about 3.3 million and the low was 2.3.
Yeah.
And then on the cap rate side, listed on market, 5.6 on the high side, 5 was the median, and then 4 cap was the low.
Whoa.
Yeah.
Whoa.
Again,
it's California, Rodeo Drive, Chipotle.
West Coast.
Yeah.
On the Starbucks side,
Oh,
there's about 210 on market, give or take. If you kind of filter that down to, with them, we did 8+ years remaining.
okay.
Once you get below that, I mean, you really start looking up and going, man, you're deteriorating value.
Yeah.
And it really starts day one because they start with that 10-year term. But with 8+ years remaining, there's 157. High price point listed on market was, gosh, what is this? I think I got some bad data in here. The high was around 5 or 6. Those California sites are really pricey. And then the median was like 2.7 million and the low was 1.2 million. From a cap rate range, you see a much bigger spread on these guys just because of how many are on market and the challenges that we've talked about in the past. But high cap rate for them listed on market was 6.75. The median was 5.75 and the low, California again, 3.2 cap. So,
Oof. Are they still doing double nets?
they are.
Yikes.
Yep. Still doing double
Hard
net.
pass on a 3 3/4.
Yeah.
Well, just to be clear, were you ever in at 3 3/4?
No.
Only if we're selling from a 6.
Yeah, I would totally party on a McDonald's. Though,
I was about to say,
375.
you're in
I
on
do. Give me
McDonald's.
some golden arches.
Yep.
Will eats Happy Meals every day.
He wants
I
to
do
own
not.
one near his house so that he
Dude.
can drive by and introduce himself every
There
morning.
is one on the corner of Plano Road and Northwest Highway, and I would love to own that thing. Prince Cash.
I did take my truck to the Caliber collision we owned yesterday.
Yeah, that was super funny.
Just give them a test run.
Yeah. No, I did. My son wrecked his truck, so I was like,
I'm here to do a landlord inspection too.
they're like,
What's great about
Call
Caliber, I don't know if they still do it, but years ago, we were selling a few. There was one in Fort Worth, and we go meet the buyer out there. We talked to the manager ahead of time. He was great. We're like, hey, we're just, we try to keep it low key. We work with the property owner. We're just going to walk around, take a couple pictures. We won't get in your way. He was like, no problem. Come in here. He goes, we'll let you peek in the back. And it was great because we kind of walk through with this guy and it's like, hey, we're just, keep this low key. But the manager's great. He took us in the office. You look up on their board and it was like their goal was like 8 million or something crazy, for the year. And then you go look at where they were and they were above goal. And we're like,
That's
hey,
great.
did you see that?
yeah,
He was like, sold. Let's go.
Yeah.
yeah, it's good. They're a machine.
Yeah.
They are a machine. And they get a bunch of insurance money paying.
Yeah.
So it's
Yeah.
consistent. All right. Last one real quick. Walgreens, there's a lot on the market. 364 is what we pulled. Obviously, that's kind of changing daily, but high price point on that one was 41 million. I think that was a portfolio that got pulled in. So we'll try to get those separated out. The median on them is 4.6 million and the low was $1 million. So cap rate wise, all over the place with kind of the challenges that they've got and some of the things that they're doing. But 12.39 cap, which is huge.
So that's a dark location.
Yeah, there's dark, short term. It's got, probably a big rent on it. And so they're trying to still capture some value off of that rent. And then median was 7 cap and then the low was 4.21. So, the
Walgreens 4.21 has to be their new little concept, right? It has to be a brand new one.
There, I think it was another California site.
Yeah.
They've still got some great locations. They, I think it's kind of a bifurcated market with Walgreens where you've got these big rents in these just kind of neighborhood intersections where you can't ever go replace that rent. There's not a good backfill tenant. There's maybe some dollar stores that'll backfill. Goodwill, I've seen backfill. But if they're these little corner neighborhood market locations, then it's difficult to go replace that rent that they're paying. So those are going to be high cap rates. But then they've got some great sites that are sitting on corners where there's 60,000 plus cars at the intersection. Maybe it's a dense infill location in California. And maybe you look at that one and go, gosh, these rents are below market because they've been there for 20 plus years and those are the ones that are still demanding a real low cap rate.
Rob, do you have any tenants that are chasing the dark sites, like for concepts? Like someone's got to be thinking about that
for the Walgreens in
Yeah.
particular.
Yeah.
It's a very unique size, right? 15 to 16,000 square feet, freestanding, with a drive-through and not a ton of parking, relatively speaking. It's not an easy backfill. It's not an easy demise to put 2 tenants in there.
Yeah.
Because nobody wants 6,000 square feet either, right? So
Yeah.
it's a very unusual box when you start trying to split it up. And then you add 3 tenants in there. Well, now you don't have enough parking for all of those guys.
Yeah.
And then the drive-through is on the far back corner. So anyways, it has some unique challenges to it. The other, to elaborate on that, is, Sycamore Partners is evaluating buying Walgreens. That could happen even as early as next year.
Okay.
You know,
Are they a private equity firm?
Yeah, private equity group. So, if you're an owner, you're sitting there thinking, oh man, like it sounds bad right now, but if Sycamore buys it, it's going to get even worse.
Oh, yeah.
Because they are going to hit us over the head as hard as they can.
Yeah.
And you've got a lot of these, Walgreens, CVS, that was kind of all the rage from hey, I sold my house in California. I'm moving to Tennessee around the grandkids. We're going to 1031 it into Walgreens, and I never have to touch it again. It's a 50-year lease with, 5-year options after that. It'll be great. Well, you've got these owners that are now scared to death. Oh man, if this Walgreens goes away, this is my retirement.
Yeah.
What have you. I think that's a very unique situation. And it's not a fast food drive-through that goes dark and you can backfill it in a heartbeat.
Yeah.
You got to get creative and you got to spend some money because, you touched on the Dollar Generals of the world. Those can easily step in and utilize that space, but they're not going to pay the rent that Walgreens is paying.
Yeah.
Not even close.
Yeah.
They're doing a lot of
They advertise,
subleases.
they sell things for $1.
Yeah.
Yeah. They've done a lot of those as subleases. You see the Dollar Trees and the Dollar Generals in the backfield. Those are subleases direct through CVS or Walgreens. Well, CVS, Walgreens are taking a write-off on that loss. They're not being made whole on that rent.
Oh, that's it.
So they're in a situation unlike, who was it? Big Lots that sold their leases for profit. They're
like, eat it.
They're in the negative on their lease.
Totally. You get into the Big Lots and the Bed Bath & Beyond and the Bye Bye Baby. Those are junior anchor spaces, very marketable.
Yeah.
A ton of tenants that want to backfill those. And they're probably under market rents.
Yeah.
Totally different scenario than the freestanding Walgreens on the hard corner.
Yeah.
And you've got a list of 5 or 6 tenants that could really step in and just immediately occupy the space.
Yeah.
Other than that, you got to get really creative to figure out what that solution is going to be. And if you've got a VC coming in to acquire, there's no telling if they just suck the capital out, go BK, default on all of those leases that they don't want, and then plan to, operate from there, or if they're just going to beat the portfolio to death, scare the bejesus out of all these owners, get rent reductions even on the great stores, and just stay and continue to operate the ones that make sense.
Yeah. Two comments to that. One, whenever tenant reps bring us tenants, like, oh yeah, PE backed. I'm like, well, there's a dude somewhere and he's got a Harvard MBA and his job is to maximize profits.
100%.
So we actually are scared.
Yeah.
Like, because they're probably a lot smarter than we are. Somehow.
Well, they'll cut bait.
And they'll cut
They're
bait.
not afraid to cut bait.
They will lose to win
Yeah.
many times out of 10.
That's right. It's all about that 5 to 7 year run and how do I reduce cost? How do I try to bump sales or whatever just to make that EBITDA number look better so I can sell it on a better multiple after they grow it for 5 to 7 years.
And then in my neighborhood, I think I have 2 CVS's. I've got a bunch, but Walgreens, I can't remember. One is getting converted to a car wash right now. And then the other one I get is a dollar store.
Right.
And I was just thinking, I was, oh, that's a great conversion, but sounds like it's a sublease.
So chances are you've got CVS who did a build to suit there. And is paying, we'll make up a number, $48 a foot, right? Because it was a turnkey deal for them. They signed a super long-term lease. Well, they've elected to close that facility. Nobody's going to match that $48 rent number.
No.
And they still have 15 years on the lease or whatever it is. So they turn around and sublease it to X retailer. And those guys are going to pay $15 or $18 or maybe a little bit higher, but not much.
But is that what those things are worth now? Like,
yeah, if you just take a shell to market, you just white box it, have fun. What do you need?
It's tough. We've got one right now that we're working on selling. It's in a small market in Indiana, right off the interstate, but it's across from Walmart. The real estate fundamentals are great. And we've got a lot of tenant interest and a lot of C-store interest. The challenge is they still got term. They still have, I think, 7 years remaining on the lease. They've offered buyouts and that they kept ratcheting it up. I don't think they've introduced a new one just because the seller, our client, hasn't accepted any of them, which he's smart not to unless he knows who's he going to sell it to. And he's probably, we're on the market for around a little over $3 million. And it probably needs to be more like 2.5 to make the numbers work for even a C-store user that'll buy it, come in there, remove the building, do all the demo and everything that needs to be done. Now go build their own facility, which is going to cost, several $1 million. So they've got a huge investment in the site, but there's enough there to go make that happen. The problem is we're priced over 3 and it doesn't quite work for anybody. And he's ultimately he needs to sell it there, plus get the buyout he's got on the table from Walgreens to get whole on what he's got. And anything less than that, he's just not been very motivated because he's still collecting rent.
Yeah.
And he doesn't want to go do that buyout prior because if he goes and does it and he doesn't have the other deal ready to close, well, now all of a sudden he's got a buyout, but now he's got to start coming out of pocket for insurance and taxes and everything else. And so they're complicated. They look great when you look at them and, oh, this is a great redevelopment site, but getting the numbers to work, getting everything to match up. We got multiple developers that are interested in too, but it's this balance of they need time. They're not going to go get their client all fired up and excited about it unless they've got it under control. And they're not going to go close and they don't want to go spend a bunch of money on it until they know they've got a lease in place and the numbers work and they can move forward on it. So they're tough.
Someone's going to have to figure out how to use the existing building to make it make sense. Could a C-store cut the front half of it off?
Totally.
Yeah.
I was just thinking the same thing. You shave the front. You've got essentially a triangle on there. You've got your gas pad out front. Something like that could potentially make sense. But, just the building itself, that's just an unusual size, right? You got a swim school or you've got, general retail. They're not going to pay the freight that these guys paid when they did a build-a-suit.
No.
That's the
swim school. That's interesting.
Yeah.
Well, you're just talking about people that just don't have the credit behind them.
Yeah.
Sure.
Yeah. Now, the one thing I will say is I don't think that the need for pharmacies ever truly goes away.
Sure.
It may diminish. We don't need as many as we have, what have you. But it's one of those, if you can find a good location that performs well and you get an owner who just wants to get it off the books because they're scared to death for one reason or another, you might be able to buy something now at a very, high cap rate and go, hey, I'm just going to ride this thing out. I feel confident in the real estate that even if everything implodes, but chances are if that's a good facility, it's going to stay there in some form or fashion.
Yeah.
And you ride it out and all of a sudden you look up in 2 years and Walgreens or CVS has kind of come out of this fog that they're in right now. They figured out the insurance piece of it. They've gotten stronger as a company. Walgreens has talked about selling boots over their boots concept that's over in Europe, divesting of that. All of a sudden you get a cash influx. Maybe they're healthier in 2 years.
Yeah.
You re-up and sign a longer term lease and you're able to sell that at a good spread. I think that's something that's a realistic possibility for the right real estate with a strong performing asset.
Yeah. Someone's got to figure that out. It seems like when you said C-store, it seems like a C-store to me.
Yeah.
But,
Even some of the guys I've talked to that have redeveloped some of the pharmacy sites and they've had, a good C-store tenant come in and they'll do a ground lease. By the time they've done everything and the ground rent, and then they go look at selling it, even if they're selling it at a 5 cap or wherever it is, they're like, gosh, for the exercise they just went through, they're kind of like,
that yield's not
there's not a lot of juice there.
Yeah.
So it's tough on those, which is crazy because Walgreens, CVS, that pharmacy was the darling of the investment market for 1031 buyers like Rob kind of touched on at the beginning. It's like that was what everybody wanted. And that business has just changed and you see this new evolution happening. So,
You run through all the highest paying tenants, right? Banks, coffee, fast food. none of them fit in that box.
No.
Right.
No.
And you're not going to buy that box cheap enough to then spend the money to demo it, to then be made whole when you do a ground lease with one of those guys.
Yeah.
It's a tough nut to crack.
It sucks.
You don't always win in real estate.
Yeah. It's true. I feel like I've been saying that a lot recently too.
Come on, bonus depreciation.
Yeah.
Well, that's some pretty cool information to have a data point to reference next time.
Yeah.
So
Absolutely.
we're getting this
Yeah.
rolling. So
We'll kind of touch on, how many were on market last month? What do we look like this month? Trends that we're seeing in any of those guys, and we'll dig into one or multiple. I know
Sure.
we talked a little bit about 7-Eleven and Walgreens. So
well, I think it's time for our local reporter on the street.
That's
Rob
right. That's right. That's right. We've got a few headlines to touch on. So, this is the time of year everybody starts kind of releasing what the forecast growth wise is going to look like next year. So we've got some high level stuff that is fairly exciting. So we'll start. Dollar General plans to open 575 new stores and do 4,250 remodels across the country.
Wow.
They're also testing a same-day delivery in 75 stores with plans to expand that to thousands of stores if it performs well.
So they'll deliver to you.
Right. And keep in mind, Dollar General,
tertiary markets too.
I was going to say, most of these are in small town USA.
Yeah.
And that Dollar General is the grocery store.
It is the
and
grocery store.
The Walmart, and it's everything. And
the pharmacy, the C
Totally.
store, the grocery store, all of it in one.
but their continued expansion throughout the years has been amazing. I mean,
Golly.
they're growing at 500 to 1,000 stores a year, every year consistently for the last 15 years.
Yeah.
Wow.
I mean, it's
That
been
is
amazing.
wild.
It's
It has
very
been.
impressive to watch.
Every time I see their numbers come out, I'm like, man, that sounds like too many. And then they just keep cranking them out.
Right.
Do the remodels? Do we know if those are like renewals? You think, or
There's probably something in there that's
Yeah.
triggering that. And
Yeah.
so it's hey, we've been in here for 15 years. We'll do
Yeah.
a refresh and we'll exercise our 5-year option, or we get a landlord contribution to go in and do that refresh.
Yep.
But a lot of those stores have been there for a long time, and it's time to update them. And maybe you're adding a grocery component to it that wasn't there in the past, or whatever it may be. And we've even seen a lot of those that have moved directly across the street, because it was so expensive to try to remodel their existing facility and it was undersized.
Yeah.
Heck, we'll just buy the pad directly across the street, which is probably not that much money in some of these towns. And
Yeah.
we'll do a new build and it's even easier. You
Right.
don't have any downtime.
I think that's it. It's like, it's just what's it going to cost us to remodel this? Is it big enough? If it's not, a lot of times it is. Let's just go across the street. Most of the developer clients we've got, or I think all of them, they just get, when they're working with Dollar General, those guys are giving them a lat long and they're like, here's your circle. I need anything within quarter mile or whatever it is of this. And these remote markets, that's not complicated. So the owner's hoping, I hope you can do everything in this remodel because I don't want you to go across the street. And I've got this, metal building I don't know what to do with.
Yeah. We looked at one in San Antonio.
But it was like in San Antonio.
Yeah. And they were going dark,
Yeah.
I think, or something was going on.
There's too many people near this Dollar General.
And somebody sent it to us and they're like, dude, you got to get a hold of this thing seemed primo. Zoning wasn't there. And I think it would have been an uphill battle. But because they are metal buildings,
Had a little lane with it. We're like, oh, this could be a collision center or something like that.
Yeah.
depending on clear height, you just punch a door in that sucker and boom. So
Did y'all have a tenant in mind or just
No, we just would have
something
bought it
industrial?
and kind of see what happens and
Yeah.
try to kind of move it to industrial.
So Burlington plans to open 100 stores in 2025. Q3 sales were up 11%.
So does Burlington compete with Big Lots? No.
Burlington is almost 100% fashion. So
Okay.
it's,
Big Lots
they
is
used
like-
to be the
Yeah.
coat store or whatever
Yeah.
they were branded as. But,
Right.
it's, there's one in Prosper, right? At
Oh, yeah.
Gates of Prosper.
Mhm.
And it's clothing, men's, women's, kids, shoes.
Yep.
So it's all apparel. But
Yep.
they've been on a warpath recently and had a lot of success buying those leases of the
Big
junior
Lot.
anchors that
Yeah.
went dark. Tractor Supply plans to open 90 stores in 2025.
I love me some Tractor Supply.
You have to love Tractor Supply. Academy Sports plans to open 20 to 25.
Mm-hmm.
Lowe's 10 to 15 in 2025 and beyond. They're doing some changes to try to incorporate online as well and really working on that holistic model.
Okay.
And then Aldi plans major expansion and renovation of the U.S. headquarters, planning to add 800 stores by the end of 2028.
Could Aldi's going to Walgreens? They're a little bigger footprint.
Yeah, so I'm sure they would make some exceptions, but that's actually too small for them. So they need to be just a little bit bigger than that. I think they're just over 20, plus or minus. So I'm sure they could squeeze in the right market. But
you can see I'm trying to angle to like go buy a Walgreens to shove someone in there.
Bob's got plenty to sell you. Yeah. You let him know. He'll find
Greenburgh, Indiana.
Yeah. We will find tenants.
I thought this was interesting. I didn't know this. Aldi's already up to 2,400 stores already.
Wow.
Really?
Really?
Yeah. Just super impressive.
Like, for me, I just kind of, I don't even think I've ever been in an Aldi.
Really?
Like, I just kind of like pass by them. Like,
there's definitely a consumer base for that, especially with the inflation that we're experiencing.
Yeah.
If you just want, you go in there's one type of flour.
Yeah.
Or you've got one set of bananas and none of them are organic, and you've got one thing of biscuits and whatever it may be. But there is a market for that without a doubt. And if you want to go in and save some money and get the basics, it's a place to shop.
I'll tell you this: their organic beef. My mother-in-law turned us onto it. It's actually really great, but that's pretty much the only product we would ever get there. In Bluebell, often is on sale there.
Really?
Yes, secret sauce. But yes, you're correct.
Just only expired a week, or
no.
No, the Bluebell goes quick.
The Bluebell is it's all good. It's all good.
Little freezer burn, not much.
It's all right.
Banana pudding, Bluebell is the best.
Really?
Yes.
All right.
Will's getting some tonight.
Yes.
He's writing that down. Yeah. His first note of the day right there.
That's a lie. That's a lie. There's notes on here. A lot of scribbles, but.
So some other highlights. So Kroger Albertsons, Tom Thumb Albertsons, that $25 billion merger got called off for the time being. Yeah.
Denied.
Now, what happens next year? I don't know if that gets readdressed under a different administration. But I think for right now, that's essentially dead in the water.
Essentially antitrust, right?
Yeah.
But they're making changes, right?
I'm sure this is going to be, this is going to be reworked and readdressed.
You're fired.
On that note, both of those companies have continued expansion even while this acquisition conversation has been ongoing. So in Dallas, Kroger has announced 2 new locations, one in Little Elm, one in Fort Worth. They've recently opened in Melissa, and they've got 2 under construction currently, Plano and Fort Worth as well. So Kroger's been aggressive, and Tom Thumb, same thing. They just broke ground on 3 locations on the same day. Midlothian, Sunnyvale, and Sanger. Sanger.
Yeah.
We're part of that one.
We're in
there.
There
you go.
Yeah.
That's right. And then of note, Tom Thumb recently just terminated their lease at Redbird Mall. That was kind of an interesting
How come?
deal. Yeah, you've got Joe V's that backfilled the old dark grocer space on Camp Wisdom.
What's Joe V's? I never heard of it.
So Joe V's is HEB's concept. It's essentially I don't want to say
discount retailer,
we'll
discount
go with that.
grocer.
Discount grocer.
Okay,
that is does very, very well down in Houston. This was the first Joe V's opening in DFW. Made a lot of press. It's perfect for that area.
Oh yeah.
That's a grocery desert for sure.
It is. Yeah, that's a huge thing down there.
And I think that Joe V's will perform very, very well. And so Tom Thumb had signed a lease as part of that Redbird redevelopment. I think with the competition coming in, the landlord might, there might have been some delays in delivery and some dates missed. I think it was an easy way to, exit out of that.
So they terminated. Did they have a right to terminate?
They did.
Okay.
Yeah. My understanding, I wasn't involved in that deal, but my understanding is they had some dates in there that were not hit, and that allowed them a termination right that they exercised and have moved on from that.
It's probably best for everybody.
Yeah.
Sounds like Joe V's is probably a better fit for the area.
Sure. Yeah. But there was a ton of press when they landed that deal. Like that was a big thing for the Redbird Mall redevelopment, which has been a great success. You've got medical down there, retail. That's Starbucks. every time I go down there, it's got 50 people in line. It's amazing.
Yeah.
It's a huge revenue location for them.
Yeah.
I think I was in some seminar with the guy who's put that all together. I might be over my skis, but I think it's like a top 50 location in the country because there's not one within 8 to 10 miles.
Yeah, wouldn't surprise me.
For Starbucks.
For Starbucks, yeah. So
we sold a Cane's right around the corner from there.
Yeah.
And I went out there one day to look at it and take pictures, and the traffic was ridiculous.
Yeah.
And I called our drone guy. I go, you got to get out here. Come on a Friday lunchtime.
Oh, yeah.
It's the best drone video I've ever had. The traffic it was wrapped around the building a couple times. It was out in the street. It was crazy.
Yeah.
There's a lot of pent-up demand in that market.
How many times have you reused that drone video, Bob? Don't lie.
I just
taking pictures from different angles.
There you go.
Let's show this Cane's. It won't say that it's actual photo.
Yeah, it just says representative photo. Yeah. I love it. Let's see. We've got a couple new developments coming in and around DFW that are of interest, especially to us that live up in the great northern exposure. So we've got Fields development in Frisco. West Fields is essentially the same developer who did Shops Legacy West, has now moved up and is working with the families up there to do the Fields West development, $660 million.
Who owned the field? I mean, it's named after the owner, right? Fields was
Mr. Fields. So he was an attorney in Dallas.
Okay.
He actually owned a bank in town as well, and he was big on buying land and just sitting on it.
Yeah.
And so he had 50 acres at, Stonebrook in Lebanon that he eventually sold to Hines that built a residential community. But Mr. Fields owned all of that land. He passed away with no kids, left it to his nieces. They have now brought in the Hunt family as a partner on that, as well as Femi Hanrahan is going to step in. He was the one that
he was a developer.
Yeah, he was a developer for Legacy. So he stepped in as the development partner on these projects. And so it's really neat to see what they're putting together. You look at the site plan, it's very similar to Legacy West.
Yeah.
Bigger. And it gives a chance for everybody to kind of look at it and go, hey, what did we do at Legacy West that worked? What didn't work? What would we do better? And now you get to redo it,
optimize
on
it.
Steroids.
So have you watched the YouTube video of the Fields?
I have.
The drone thing?
Yeah.
It's like, when does this end?
Yeah.
Just keeps going and going.
The city of Prosper can fit inside the Fields land.
Wow.
Whoa.
I mean, that's the scale of it. Just
Wow.
put it in perspective. So it's major, right? You got
Dude,
yeah.
that's nuts.
That's awesome.
I haven't seen the video. It's pretty impressive.
Oh, dude, it's like you're walking down Legacy West, but it's like 6 of them.
Yeah.
Wow.
You're like, okay. Like in my mind, I'm like, oh, there's Gucci, there's North Italia, there's Shake Shack or whatever. And then I'm like,
again.
And there it is again.
And there it is again. It's
Yeah.
I remember watching it and be like, holy smokes. Because I worked at Liberty Mutual there in Legacy West right when it opened.
Okay.
I was in that office building.
Sure.
And I like the joke, like we were peeling the plastic off the glass, and we actually were.
Right.
My team was the first team in there, and there was still vacant retail space there. And like that hotel was not there, and there was just some missing components. And it's really beautiful, like what they did. It's really
impressive.
Nice. Very impressive.
When will this deliver?
So I think this is probably, I don't know exactly, but I would venture to guess it's 26, 27.
Yeah.
I mean, it's going to take a while. I don't believe they've started moving dirt yet.
Yeah.
Obviously, you've got stuff around it that's moving, but it'd be right there at Fields Parkway and Dallas North Tollway. They just made some press on some announcements on executed leases. So Bloomies is coming in. That's 50,000 square feet. That's the Bloomingdale's concept, where they essentially pull out their best of the best brands out of Bloomingdale's, put it in 50,000 square feet. This will be the first in Texas.
Yeah.
So there's only 4 of them currently operating nationally.
That's pretty big time.
That's big time. You've got Pottery Barn is committed.
6.
Mastro's is committed, 10,000 square feet, super high-end steakhouse.
Mastro's. Oh, nice.
That'll be the first in DFW.
Yeah, it is.
So that got announced as well. You've got, Beverly's, Greenpoint, Mexican Sugar, 60 Vines, Tommy Bahama's Marlin Bar is going in as well. So a lot of activity there. It's pretty
Tommy
neat to see.
Bahamas is unassuming.
It's I think it's a great option.
I went there. We went and ate dinner there the other night. It was really good.
The one in
great.
Legacy?
Yeah.
Yeah, I
Is there
never
live
go there.
music on the patio?
Yeah.
Yeah. It's
Yeah.
great.
Me and
It's a good
Will and
vibe.
Devin went there with the wives. And it was
Yeah.
like- it was.
I've never
Really good.
eaten there before.
It's pretty good, man.
Yeah.
Like
Really?
I recommend it.
Huh.
I highly recommend it. I thought it was really good.
You think that's a trend with some retailers? Like I know Restoration Hardware is doing
Totally.
that with all of their big new high-end
Yeah,
monster
galleries.
developments.
We ate at
Right.
one.
Yeah, I've had it two now. The one in New York, and then the one here.
Yeah,
Wasn't-
it's very
Food's okay.
Yeah.
Yeah.
Ambiance is really not awesome. Like if
Yeah.
you want to be seen,
Yeah,
you go there.
Yeah, it's like an Instagram photo.
Yeah.
yeah.
Stop.
Here's the thing: if you can execute both well,
Yeah.
there's not a time that we don't go to Tommy Bahama for lunch or dinner,
Yeah.
and we don't walk into the retail store and at least
Yeah.
browse around,
Yeah.
and maybe
Yeah.
we grab a couple things here or there.
Yeah.
And it's like I don't know that I would just walk into Tommy Bahama unless we were going on vacation, right?
Yeah.
Sure.
We wouldn't just pop in, but
Yeah.
if we're gonna have dinner and drinks next door, I'm at least gonna walk in and
Yeah.
see what's going on inside of there. So you can definitely see the overlap,
Sure.
but you've got to be good at both.
Yeah.
Because if the restaurant is disappointing,
Right.
you could fail miserably very, very quickly.
Yeah.
And honestly, you will be like, get me out of here. I don't want to see any of this
Right.
clothing.
Sure.
Yeah.
Like, screw
Yeah.
this.
Yeah.
Because I would not walk into Tommy Bahamas ever. It's just not my vibe.
Another one to focus on, West Grove and McKinney.
Okay.
So this is Custer and 380, done by a group here locally. Very impressive development. Whole Foods coming in. This is going to be one of 3 Whole Foods that's going to open nationally next year. Looks fantastic. The buildings are up. Infrastructure's in. It's
The
full steam
Chick-fil-A is
ahead.
already open.
Chick-fil-A is open. Yep.
Had
So-
breakfast there.
Today?
No, a couple weeks ago. Me and Layla went and had breakfast there.
Yep. So you've got you still have some really good concepts, not the high end that you would have at a Fields per se, but
Mhm.
you've got Sephora's in there, Velvet Taco. You've got a bunch of restaurants to be their first in concept in Dallas or in Texas coming in there as well. So pretty neat what they've put together, and that'll be online, early mid next year.
Yeah, the Whole Foods is pretty close.
It is. They just sold off all the land in the back for the multifamily development. They've got dog parks coming in. They've got park settings in between the restaurants.
So
It's right next to it.
is this all for,
multi.
that's all, oh, wow. They're putting a ton of units in.
Yeah.
Jeez.
It's very high end multifamily in the back.
Mhm.
Big premium on those units.
Is they are doing it De La Vega, or is it like Trinsic or somebody like that?
So De La Vega is doing the retail side
Okay.
of it, and now he's sold off the multifamily
you
land
said
to a
that.
different group. But that
Um,
just closed a couple weeks ago.
these are all of our tenants that we interact with.
Mhm.
It's like that. It's just kind of main and main.
Oh, it's a great location.
Yeah, it's awesome. What's up with Planet Fitness taking over our Texas Family Fitness, man?
Man, I'm disappointed.
Like they're gonna change it all, right?
I
mean,
was there this morning working out.
Yeah.
They've already ripped down all the signs on the inside. They're about to rebrand it. The whole thing's
but their whole deal is you can't use free weights.
who's
Have you ever been to a Planet Fitness?
Yeah.
There's no
Like,
free weights?
there's free weights.
There's free weights, okay, but like
not to
if
that
I want to
scale.
bench,
Yeah.
it has to be on a Smith machine.
Mm.
If you want to squat, it's on a Smith machine.
That's
You want to do deadlifts on a Smith machine.
Is that right?
Why?
Yeah,
Interesting.
Why?
So they're gonna.
You got
there
to deal
were-
with all the purple.
yeah.
I think it's like black and yellow now, isn't it?
Oh,
Or
is
it
it?
still
They
purple? I
changed
don't
it?
know.
Oh.
It doesn't matter. But yeah, so there were 11 Texas Family Fitness locations. They sold to Planet Fitness. They're going to close down 4 of those and then convert everything else. So anything that competed with an existing Planet. So they closed the Colony. They closed Lakewood.
yeah.
One in Plano, and I think one in Garland. So those
Wow.
were the 4 that are going to close. But it's selfishly, it's a little disappointing.
Yeah.
I love Texas Family Fitness. We've got one right by us, but
Yeah.
they're full steam ahead on a remodel.
Yeah. The one down the street from me closed and it caused an uproar. People were pissed.
Is that the Lakewood?
Yeah, the
My
Lakewood
wife
one.
was talking about that
Abrams.
when she's
Oh,
like,
they were people were mad.
people were blowing up.
Yeah. All these face group chats, like
Yeah.
I don't look at them, but it just was like at the top of my feed and I had no idea. And then everybody rushed over to the Planet Fitness, I think off of Northwest Highway or somewhere in the area. And they hadn't uploaded them yet. And it was like just pandemonium,
Chaos.
Yeah.
chaos.
Yeah.
Yeah.
The Prosper Moms Facebook group wasn't happy, I don't think.
It sounded like the They sounded like, I guess Tom Lane calls it Planet Golden Corral.
Wow. That's fantastic.
Yeah, I guess the integration wasn't done right with the technology.
Yeah.
Not surprising.
Sounds like an opportunity, real estate opportunity for the ones that aren't going to stay open.
There's that one
We've already reached out.
concept coming in, right? Who is it? What's that one Mark Wahlberg's like hyping
Ethos or
up? Ethos.
EOS.
EOS.
Yeah, so EOS is new to the market. Amped Fitness is new to the market. So they're out of Florida. They've got one in Richardson. They just signed a lease in Fort Worth and one in Mesquite as well.
Okay.
Quite a few down in Houston. So there are plenty of people to backfill those boxes.
Yeah.
That's not the issue.
What separates that type of gym from the type of gym that was in there? Like, what are they doing differently? Well, I guess the free weights, that's like
I don't know if they'll do that there. I mean, golly,
Yeah.
you would like wipe out a massive part of that place. They built that thing great, I thought.
They did. It's a great facility. I think, if you go into the Amp Fitness, for instance, it's a very cool feel to it. They've got the music playing. They've got some black lights in there, some neons. It's meant to be young and edgy, and their target clientele is, 17 to 34. Diverse clientele. They really have a target market there where I think Planet Fitness, for instance, is very driven towards, hey, we want to market to everybody.
Yeah.
And we want to make it so cheap that even though you're not going to the gym, you're not going to take the effort to cancel your membership because it's only $10 a month.
They want the planet there.
Yeah.
The whole planet.
Getting that Golden Corral buffet.
I think they're one too that if you can't cancel over the phone, they make you come in.
You got to go in and
Kinda
give a
get
blood
shamed
sample.
and then-
Yeah.
Cowboys
Hold on, let me
Fit
get
was
my
like-
manager.
Yeah.
30
look, he's
minutes
on break.
later.
Yeah.
Cowboys Fit was like that.
Yeah.
Because we used to be at the Star.
Yeah.
And
They got real mad when I there. Where are you going? I go,
Yeah.
Texas Family Fitness. They're like, why? I go, it's cheaper. But I go, honestly, you got 3 squat racks. You know how
Yeah.
irritating it is. Like,
Right.
like standing in line, like there's some girl like doing squats and just Instagramming her butt.
yeah. No, that's like, but I used to do the one in East Dallas,
Yeah.
the Baylor Scott and White facility. It's the same thing.
Yeah.
So,
Couple other highlights. So Black Friday, we saw online sales increase by 10%, sales totaling $10.8 billion. And the entire
Wow.
Cyber Week generated an estimated $41.1 billion in sales.
Very nice.
Very nice.
credit card debt.
Let's see. Oh, yeah. They said a big function of that was the buy now, pay later components you see on almost every website.
Yeah. It's just,
There's going to be like a lot of not pay later.
there's a lot. That's just like, it's like fat kids and sugar. Freaking addicted.
Yeah.
Yeah, speaking of that, we've got Tudor's chocolates coming into Rockwall. $20 million Rockwall chocolate factory plans to construct a 225,000 square foot facility at Rockwall Technology Park. Tours will be offered. Will
This should be like
I know that's
Willy
something
Wonka.
You might be interested in.
Like
Yeah.
Willy Wonka
Willy
and the
Wonka.
chocolate factory.
Yeah.
That's probably not that far from my house.
Let's see. Container Store was just delisted from the stock exchange.
Oh, where's your sound effect? There you go.
So I think those guys are definitely in trouble. They have been for a while. They were supposed to get a loan that was going to kind of get them through, and that never materialized. And I think they got hit. They had a lot of product that sold at Bath & Beyond and some of those other stores that are no longer around. So they've gotten hit from both directions. And I think during COVID, they saw a major boost in business. Right?
Oh,
Everybody
sure.
was sitting at home. They wanted to get organized. They wanted new, cabinets, fixtures, storage containers, everything else. That obviously that has worn off now at this point. So I think they kind of got spoiled with some very high, overly inflated sales.
Yeah.
They spent some money that maybe they wouldn't have otherwise, and now they're feeling the effects of that. So those guys are in trouble.
I feel like they were so strong for so long.
So long. Yeah. Well, if you think about it, they really led the charge.
Yeah.
You know, now you can buy very like quality product at Lowe's, Home Depot, everywhere else.
Mhm.
But there was a time where if you wanted nice storage bins for Christmas or whatever, that was where you went.
Yeah.
Well, now you've got 100 different options,
Yeah.
including ordering online and just having it shipped to the
For
house
sure.
from Amazon. There's a lot of alternatives that didn't exist 10 years ago.
Yeah.
And so that their product is now available everywhere. And, you know, it wasn't that case for a long, long time. They were a darling.
Is their headquarters Coppell?
It is.
That's home base, right?
Yep. Yep.
Sounds like there's a distribution center available soon.
Then I think you guys touched on it on one of the earlier podcasts, but Raytheon, you know, selling their Lemon Ave location, 15-acre site at 6,000 Lemon Ave for Porsche dealership.
Yep. One day.
Will, it's funny how the Italian was drawn to the Italian sports car dealership news.
Yeah. I just love those cars. They're so nice.
I can see you driving down
A Porsche.
in the Porsche
Yeah.
with your Tommy Bahama shirt on.
Yeah. After just chowing down on a big old fat man burger.
When we sell a
Hell yeah.
portfolio one day,
Oh, yeah, it's coming.
Will's going to be
100%.
within the next week.
Yep.
What color, and is it a convertible or are we going
It'll be a 911 GT 3 option, silver, black interior, or black on black.
black on black? It's already ordered.
Yeah,
Sounds like he's already built it online.
I have. Come on, Bella. You just threw me on the- Yeah, no, I've already, trust me, it's run the traps.
Yeah.
I love it. Well, good. That's it
cool.
for me.
Awesome. Well, I guess next month we'll have ICSC Red River. So
Coming up.
yeah,
Yeah. Or we can do a live podcast from the show floor.
That actually
could.
would be sick.
that would be sick.
That could be pretty cool.
Bella, you
Yeah.
think you could pull that off?
Can we get live mics, just like clip-ons right here? You do. Oh,
Let's go. That'd be cool.
well, these guys, they're-
Live from the cocktail party so we
Yes.
can have a drink while
yeah.
we're...
Oh, yeah.
but these guys are going to be like, you saw Rob's calendar last
Dude.
year. There was no breaks.
Machine.
You
We'll
probably
figure it
had to build in a pee break.
Machine.
Yeah.
You got to let me know when we're going to do it so I can schedule some time.
Yeah.
Yeah,
We're
let's
in.
do it. I like
That'd be
that
fun.
idea.
Actually,
Yeah.
that's fun.
It'd bring a lot of attention to this, too.
Sure.
Let's do it. I like it.
High
Yeah,
five.
that's...
He left me.
Sorry, man. I was looking over here.
Yeah, that's next month. It's going to be here in a hurry.
Yeah. What's the dates on that? Do we know?
I don't
can't remember.
remember.
It's like
January
I think-
31st.
Yeah,
Yeah,
29th through 31st.
Yeah.
I think 30th is the big day. Whatever that Thursday is
Yeah.
the big day.
How did Jeremy and I max out that conference? We bought tickets for ICSC members. Like, what would be your advice for capital providers or people who are kind of getting into the space to maximize? Because we had zero agenda when we went.
Sure.
We just showed up. We saw you. We know you. Didn't know you. But like, we walked around and we're floored. And just by us sitting in the middle of the floor, not really talking to anybody, we learned a ton just by being there. So
Sure. Well, we made a lot of introductions as well, right? I'm
Sure.
like,
Oh,
you
yeah,
gotta
we
talk to
did.
This guy.
But,
Come
like,
see this guy.
you were the only guy in Brian Williams and Vaquero were the
Yeah.
only two people we actually had like meaningful direct in the Circle K manager, but 3 out of 3,000. So
Yeah.
going into it this year, like what?
So you can actually go onto the website once you're registered and you can pull down all the attendees.
Yeah.
Okay.
So you can download that list and you literally go through and highlight the guys or the companies that you want to get in front of, whether it's retailers and you're going to try to assist them, or if it's developers and you want to talk about the capital stack and how you can assist in that. But
Yeah.
essentially run through that list, highlight those folks, and then believe it or not, you got to start reaching out now.
Yeah.
Because-
Oh, sure.
because especially after the holiday, right? You come in that second week of January and the calendar starts packing up. So
Yeah.
like now is the time to start making those reach outs, introducing yourself. What are you doing?
Yeah.
What's the angle? What do you want to talk about? And try to set up those meetings now.
Yeah.
And essentially that floor day is every half hour. So, we start at 8:00 and we've got meetings every half hour until 6:00 that night when we go to the happy hour. So it's one of those, but you got to get in front of it now and start doing your reach outs. But you can download that entire attendee report and start scrubbing it immediately.
I like how you just get a hotel there.
You do?
Yeah.
Yeah. It's like,
Yeah.
I'd have,
That's
I
smart.
got to leave the house I would have to leave the house at 6 a.m.
Yeah.
to get there in time to be ready and on
Yeah.
the floor. And then we've got a happy hour and then we're taking clients to dinner.
Yeah.
And it's like, well, heck, it's now 10:00 and I'm headed all the way back up to Prosper to then turn around at 6 a.m. and do it all again the next
That
day.
makes sense.
Nah,
Yeah.
that's amazing.
I think that's the other thing too. You just nailed it. But like I usually always go on Friday. Thursday's the big day. Like
Yeah.
it'll be a full day from early in the morning until late at night. most people cut out after that. Friday's some of my best days just because it's more relaxed. It's easier to have meetings. People are more relaxed, so you can impromptu meetings happen, and they're great.
Yeah.
The attendance on Friday, falls off a cliff. You go
Off a
from
cliff.
8,000 attendees to 1,500 on the floor, right?
Whoa.
But something to point out, a lot of those attendees, that 1,500 have to be there, right? If you work for X, company, like, hey, we paid for a booth. We expect you to be there on the floor. But there's nobody else standing in line to talk to this person.
Yeah.
He or she's sitting there twiddling their thumbs with nobody to really
Just
talk
on
to.
Instagram.
So they welcome it.
Yeah, they're like, hey, what's going on? How you doing? And
Interesting.
same thing with Bob. And we've had great experiences walking around the floor, and you get uninterrupted time where somebody's not like, man, I got to run off to something else. I got another meeting. I got somebody's here to see me.
Yeah.
This is just a very casual. So Friday for us is kind of a bump in day.
Yeah.
Hey, let's just walk around and see who we run into and how we can help them.
Yeah. Cool. Awesome.
Good to know.
Well, I'm going to the retail capital, I guess, of New York City tomorrow. So
There you go.
then
Jess is headed up
Jess
there.
and Vera are headed up there, right?
Yep.
So
They're doing a little girls trip up there. So
nice.
you guys will be ice skating together.
That's right. There we go, baby.
Well, Merry Christmas.
Merry Christmas.
Yeah, good to see you guys.
Yeah.
Thanks for having us.
Absolutely.
Good way to close it out, for the year. And I think there's good things ahead. I'm excited about next year. I know it's been a challenging year for a lot of people, but I think next year there's a lot of good momentum and positives. And, one of the things I'll close with, I guess, here is that we track all the multifamily, kind of like what I was talking about earlier, as far as that feeding exchange buyers, and that multifamily volumes hit like 10 billion, and it's been up positive over last year's numbers, like 5 out of the last 7 months. And so that's kind of a leader as far as a leading indicator on kind of the broader market momentum. And so I think that's all positive as we head into next year.
It's good. It's good.
Yeah.
Thriving in 25.
That's right. Well, thanks, guys. That's fun.
Appreciate
It's
it.
good.
Absolutely.